Welcome to Barchart's weekly series of webinars to help educate you, the trader investor, so that you can make a more informed investment decision. Today's subject, well, a little bit outside the box. If you can see, here is a Q&A session with me, your presenter, John Rowland. Hopefully today we'll be able to answer a lot of your questions about Barchart tools, the recent webinars, and just queries about basic trading philosophy. So last week we sent out a request out to everybody about submitting some questions, and I got to tell you, I was very humbled and overwhelmed by all the responses we got, and also I was really impressed by the range of questions and the depth of questions. So what I want to say to you guys is that I'm going to try to get through as many questions as I can. I picked the ones that were preset in that I thought had more of a universal appeal through, all asset classes, and maybe kind of reiterate some of the things that we've already done in some of our other webinars so we can revisit some of that stuff. I know that I'm not going to get to all your questions today, and so I'm going to apologize ahead. Please don't get upset with me. But what I would encourage you to do is at the bottom of our main page, if we go all the way down to the bottom, there is this blue button that says Contact Barchart. In there, you can submit your question. So if you typed in the question in the chat today and you didn't get your question answered, retype it into Contact Barchart. And, our crack staff, our support staff, these are there's a lot of folks there are traders or former exchange employees, so they have the knowledge to help you answer your questions. If you want that question to be answered by me, then just request that and they'll send it to me. Just give me a few days to answer those. And always, as to help me with a lot of the questions that are going to be asked today, is my partner in crime and resident expert of all things Barchart, Gene Baker. Hi, Gene. How's it going?
Hi, John. How are you? Hi, everybody out there.
Are you ready for Thanksgiving, Gene?
I guess so. How about you, John?
Well, this is definitely one of those bizarre years, so I don't know if I'm ready for it, but I'm certainly ready to get it going. So anyways, so let me indulge me for a moment, though, Gene, is I want to tell you what I'm thankful for, and tell the folks out there that Jean is the hardest working person at Barchart. On top of that, she has to deal with me. I'm a total knucklehead, to be honest. And she helps me with suggestions for our webinars. She proofreads my slides. She shows me tricks and shortcuts for navigating Barchart. And so I am thankful for you, Jean. So thank you very much for helping me out.
Thank you, John. And, as far as Barchart's concerned, we are very thankful to have somebody with your level of knowledge that's going to help guide our users use our website to their best advantage. So thank you.
And I'm thankful for being part of the family, the Barchart family. So that's cool. All right. So just a couple reminders here. Under the Barchart's main page, the tools section, under the free webinars, you can find the recording of all of the different webinars that we've done so far in the last 5 months or so. And this one will be there eventually too as well. So it's important that when we're doing the little discussion today, that I will reference some of these former webinars, and this is where you can find those webinars, okay? Here's our disclosure statement. Again, you remember that decisions to buy or sell, hold securities, commodities, or any other investment involves risk and best made when the advice of a qualified financial professional. And, we're going to look at things, and I'm not endorsing anything. I don't want you to construe them as an endorsement to buy or sell any particular stock or ETF or a futures market. And, the things that we're going to talk about, past performance is not indicative of future results. So just be aware of that, okay? All right, so let's jump right into it, okay? So one of the questions that I got, which I really liked, was from Warner, and he asked, he would like to know what my daily routine is and what are the optimum times to scan for trades or trade setups, set alerts. And so I want to walk through this process with you, and this one might take a little bit longer than I had planned for all the ones, but I think it's really important for us to understand that having a routine, as any learning any new skill set, that discipline, right? That discipline, that muscle memory will make us more efficient and make us a better trader. So it's really important, I think, that everyone have sort of a regular routine as far as it's trading. Now, as you become more experienced, you will spend less time on doing a lot of things, but in the beginning, certainly have some kind of a routine. So on Sunday nights, usually what I do is I kind of look at the big picture. I just want to go and look at the market overall. I want to look at my stocks or my futures positions, and I just want to see the big picture, right? I want to see what the trends have been, let's say at the weekly or monthly level, where I think price is, where I think price could move to. What are my trends doing, right? Are my trends continuing to accelerate or move in one direction, or is the momentum changing, or am I coming into an area where I believe that maybe the trend will change, or I'm coming into what I would say high in a time frame analysis or low in a time frame analysis, where I could have an opportunity to look for a change in trend or an opportunity to get in or out of a trade. Okay. On any morning, right, pre-market, not just Monday mornings, but any morning, what I'll do is I'll start by looking at my platform settings, right? So let's say I had an update from the previous night or the day before, or I did some trading yesterday, right? I'll go and make sure that all my defaults are set correctly and that my platform is all ready for me for today. One of the things that I always do is, no matter if I'm day trading or swing trading or long-term wealth trading, I always set my stop at GTC, good to cancel, because I think that's just a good discipline. Check my account balances. I'll look at my open orders, right, to see if I still want to buy something, to see if that trend still looks good. I'll look at my open positions. I'll make sure that I have my stops in position. I have my targets in positions. Maybe something has changed since the last time I put in that target or stop. I look at my available cash, right? How much margin I have available for me, either for futures or for stock trading. And then what's really important is, as I do those logistical things, I want to make sure that I check overnight news and announcements that could affect my market. So Barchart has a couple of nice features. First of all, under the stock section, right, you can look at, up here, we have the news section, and we can look at overall news or top news stories. That's real important. See if there's something that is driving the market today, or something that could be on the horizon that could influence our markets. But I want to take a time to come in here under the stock section and look at the earnings and dividends. And what I'm going to do is I'm going to look this week ahead and see what stocks earnings that could be coming up this week. Those could give me some trading opportunities. Maybe it's one of the stocks that's in my portfolio, so I want to make sure that I have the proper stops or targets in place. And also, I can also look at when dividends are going to be announced, and that will have an effect on our prices of our stocks, and also on some options trading as well. Okay. During the market hours, after the opening bell, I'll go back and look at some of my setups and make sure that those setups still look good to me, or I'll monitor some open positions. I'll look to make some adjustments. Maybe I'll raise my stop up to try to collect a little bit more profit, or I'll start scanning for new opportunities on some of my watch lists. So, I do have set up here on the top here, I have some watch lists, and I'll just go to that watch list of stocks that I'm keeping an eye on, and then I'll go to my flip charts and I'll just quickly look through them and see if there's an opportunity that I might be looking for. And a lot of these stocks here have already appreciated, and I might be looking for some kind of a retracement. Or, you know, I might look at a higher time frame, right? You know, and see if there's a reason why price has changed. Maybe I've come up against an area of resistance. So this, for instance, this stock here, you know, it's been a nice uptrend, but, you know, we've come into this area of resistance that was back in the beginning of the year. And so maybe that's why prices turn. Maybe that's why this trend is backing off. So maybe I'll be patient and looking for an opportunity to buy into this trend again. Or if I'm long this one, I say, you know, I might say, hey, let's put a protective stop that's a little bit closer because maybe this trend is now about to turn. Right? So I'll look at that as I go through my daily routine. During the day, again, I'll reevaluate trends. I'll look at different time frames. I'll look for surges in volumes. I think we have some tools in Barchart as well as looking for price volume. I look at my charts. So I can put in volumes to see if I can see you know, action or activity in a particular stock or option, especially those are our breakout candidates. And again, I'll go back and look at managing my risk. And then at the end of the day, before the close, you know, if I'm a day trade position, I'm going to close those positions out. I'm going to try to lock in or take profits on some of my swing trades. And I'm also going to go back and revisit missed trades that I didn't get, see if I still want to put a trade on, or definitely I'm going to look at the trades that I close, right? Winners and losers. I want to learn from the things that I did well, and I want to learn from maybe the mistakes that I made. Again, I'll also start looking for new opportunities for tomorrow's. So the real important part of this part of my routine is this looking at my finished trades, closed trades, and creating what is called a logbook. This is really important for discipline for us traders, having that logbook. So again, here is a portfolio that I have that I've been watching, and what I might look at is see, you know, if this, you know, if I want to take some profits or I want to move my stop, make some corrections. You know, here's one of my futures ones. And one of the nice things that Barchart does in my portfolio is I can edit and I can put notes in. For instance, here on this sugar trade, talk about how many contracts I had, what was the profit I did. Let's see if there's another example here. Here's the one on the an edit on the S&P micro that I did. It was original 3-lot trade. I got stopped out, and it says TLB. That means trend line break. That means that I stopped myself out because it looked like a trend line was broken. So it's real important that you make these notes so that you can learn from your mistakes, and also when you go back and revisit these trades, you'll know what was going on when the trade was done. Okay?
John, can I also point something out here? Now,
Yeah,
you're
sure.
talking about the importance of monitoring your portfolios or your watch lists. If you are a Barchart member, you can get your watch lists and portfolios emailed to you automatically at the end of the day. And if you are, go ahead and click that edit button. If you are a Premier member, you have additional options to get your portfolio or watch list sent at market open. We now have this midday run at noon, market close right at 3 p.m. Central, or at the end of the day. So that's a great way for you to keep on top of the things that you're actively watching.
Yeah, exactly. I mean, some of us maybe not have a lot of time to sit in front of the screen and do all this thing. So, you know, maybe I'll have that list sent to me, after that first hour of trading, so I can go back and look at my watch list or my portfolio. So I can, if I'm at my job or something else, I can go and make those adjustments on those markets. So yeah, that's one of the nicer features of a bar chart. Okay, so let's cancel that. And okay, so where were we? All right. So that's kind of my routine. Cameron asked a question about When she buys a stock, or I'm guessing, I'm going to male or female, I'm sorry, buy a stock or an option, I immediately place a loss order, a stop loss order if it drops 10%. And as the stock moves up, I change my stop loss to a higher price. Is this a good practice? Well, the answer is very simple. Yes, it's an excellent good practice, right? All trades, all good trades start with a stop. You cannot design a trade until you define your loss, until you define your stop. Once we define our loss, we know where we're going to set our stop, then we know how much reward we want to trade, look for, how much where we want to set our targets, right? And that's very critical for a trade plan. So all trades start with a stop. But I love this discussion about moving the stop as price moves up, and that's real important too, because one of the things as traders, one of the worst things we can do as a trader is to let a winning trade turn into a losing trade. So I advocate moving your stop from loss to break even to profit. So here's some things that you can think about. Rules of permission to move your stop to profit. So we can think about a time frame. If I'm a day trader, after a certain amount of hours or an hour, then I'll move my stop to profit. Technical trailing stop based on structure. This is a really good technique that I want to show you guys. All right. So I've got into my charts, a collection of charts that I have created. And so what is a technical trailing stop? So let me slide this over a little bit here. So as the market continues to move higher, right, as it makes new swing highs, and that's what all these red arrows represent. As price breaks above the old swing high, right, then what we're going to do is we're going to move our stop off of the previous swing low. This is called a technical trailing stop. So as price goes up, breaks this swing high, makes a new high, then I'll move my stop to that previous swing low, and I'll keep moving my stop as long as the market keeps moving higher, and this way I'll lock in profit. So you can see here is the last impulse that took out the previous swing high. Market went up, got above that swing high, and I'm going to move my stop just below there, and then price retreats and stops me out. So this is a really good technique to help us lock in profits as the market moves in our favor. What we don't want to do is leave our stop in a position of loss on this big price movement and then let it come all the way back and stop us out for a loss. That is the number one sin of trading. Other things we can talk about, thresholds of probabilities. If you're looking at moving averages, MACDs, Bollinger Bands, things like that. Risk rewards. If I get 3-to-1, maybe I move my stop to break even. If I get 4-to-1, maybe I move my stop to 2-to-1. If I get 5-to-1, move my stop to 3-to-1. ATR, average true range. This is really for my day traders. As I gain a certain percentage of the ATR, 30%, 50%, 2/3, I'll make adjustments to my stop. Maximum give back, that's kind of what we're seeing here, this 10% drop. I love that rule. That's a really good discipline rule. And then one of my personal favorites is the 3-candle countback. Now, I'm not going to go into that detail right now, but I will mention that you can find how we talk about this 3-candle countback in our futures risk management webinar that was on October 7th. Okay. All right. John Luke asks, I see a downtrend in cotton since 2018 on a weekly chart. And I see an uptrend in March of 2020. And my question is, how do I trade a downtrend? So I love this question, not in terms of like, how do I trade a downtrend? But I love this question because what John Luke is doing here is he's looking at trend over multiple time frames. And I think that's really important as a trader. So I think a lot of traders get confused, or they get sucked into these lower time frames, these smaller time frames, micros, minutes, hours, and they forget to look at the big picture. Okay, so this is what John Luke is looking at. Here's our cotton market, and you can see that that red line represents this dominant downtrend that goes back to June of 2018. And remember, a trend is defined by impulses and corrections, and that a downtrend, we see lower highs and lower lows, a series of lower highs and lower lows. And you can definitely see that in this process. Now, my question to John Luke would be, well, you see a downtrend here on this weekly chart, and how would I trade a downtrend? Well, I would wait for the impulses and corrections where price comes back and tests our previous swing highs, or I'll wait for when price starts to accelerate away. So in this last price movement, right, there's a couple places where price could have re-engaged the trend, and the trend could be reinforced. And we do see that price did come back and test those two shaded areas, but both of those two shaded areas were failed, right? And the market did not make a new lower swing high. So the question is now, is this market in a downtrend? And I think we can argue that maybe, yeah, it's not in a downtrend. It's actually in an uptrend, a very strong uptrend, as a matter of fact. And right now, we can see that price is actually above this last previous swing high, right? So we're making new swing highs. So this is definitely in an uptrend. So if John Luke still believed in a downtrend, or that the price is about to change, what he need to do is look at this lower time frame analysis, this daily chart, and say, okay, I see this uptrend, but I'm not going to get into this market until this uptrend has changed, until I violate one of these pivot swing lows or most recent swing lows, right? So I'm going to wait for the market to tell me that we're in a downtrend, right? A lot of traders tell the market what it's supposed to do, and they get in trouble that way. So I love this one because it is about multiple time frame analysis. And again, I'll refer you guys to that webinar, which was done on August 26th, where we look at the big picture, we look at the small picture. My personal preference is I like to look at the trend that's in control. And at this moment in time, for this picture, I see that we're in an uptrend. So I'm going to concentrate more on looking for buying opportunities than looking for selling opportunities, okay? And so there's our little conclusion. Trends are defined by consecutive impulses and corrections of swing highs and swing lows. And so we are seeing a lot of swing highs and swing lows in this uptrend. All right. Tom asks, why do I use candlesticks? A lot of folks know that when you come into my webinars, I use a lot of charts with candlesticks. So there's a very simple answer here, but I want to give you guys a little bit of a story. So I'm a former floor trader, and every day on the floor was a different event, right? Every day was different. No one day was the same, but certain price actions were very similar or repeatable, so to speak. And let's say, for instance, a day where the market opens up a little stronger and price jumps a little bit, and then buyers and sellers come together and it pauses, and then sellers get used up, and then buyers push the price up again, it jumps up again, and then buyers and sellers come together and it pauses and it jumps up again, pauses and jumps up again, right? That price action, right? And then, or how about a day where price shoots straight up, opens up super high, and immediately we're hit by a wall of selling, and then those buyers and sellers come together, and a lot of volume changes hand, and then all of a sudden the buying dries up, and the price falls quickly back down. So the reason why I look at candlesticks is because when I look at candlesticks, I can envision these battles between buyers and sellers. I really think that candlesticks help traders see these battles between the buyers and sellers. I call this kind of that picture of price. Again, so here's that technical trailing stop video here, chart, where I see, right? I see those. To me, I see those battles. I see that buyers are in control, and that occasionally, they push price away, and then maybe they run out of little, bullets, and then price pulls back. But it comes back right where the buyers were before. So that's what I see when I look at candlesticks, and that's why I use candlesticks. I really think that they're beneficial, even for the lay trader. So, I embrace that for those who want to start looking at price action and try to see what those pictures is. Now, I'm going to tease you guys sometime in the beginning of the first of the year. We're going to do a webinar on candlesticks and candlestick patterns. I don't know the date yet. Look on your calendars, but sometime in the first of the year, we're going to get into that. I think you guys will enjoy that one. All right. Okay, the next question is, can I run a screener based on top stocks to my own page and then see which symbols on my watch list are found? So this is kind of a technical question that's based on the Barchart tools. And so our resident expert of tools is Miss Jean. So Jean, do you want to take this one?
I sure will. I'd be happy to. So I'm switching over to my screen now, and I happen to be on a watch list here, and I think what the question was, okay, if I have certain symbols that I'm watching, either on a watch list or portfolio, and I'm interested in maybe finding out which of my symbols are appearing on specific bar chart pages. I'm going to show you a little trick here. This bar chart page, top 100 stocks, is ranking stocks by the highest weighted alpha, the amount that the stocks changed in a 1-year period. If I screen on the page, it's going to open up the stock screener. And I can actually select more than one page at a time, but I'm just going to quickly show you this so that we can move on to the next question. There's another filter called My Lists and Profile, and I'm going to select the watch list filter. So when I do this, I'm going to find whatever stocks are on this watch list that also happen to appear on this page today. And bang, we have 3 stocks that are on my watch list. So this is a really easy way for you to find anything that might jump out at you that you want to follow up on a little bit later. And there's all different sorts of filters. So if I want to look at my watch list symbols and maybe the ones that appear on today's volume leaders, let me get rid of this one. You can do the same thing.
Very cool. Very cool. That is awesome. I love learning something new.
I'm going to give you control back so you can go ahead and answer a few more questions.
Is that something we just rolled out recently, Jean?
Yeah, it's been there, but we've reconfigured the way that the filters look in the screeners. Very cool. And we also just made a pretty major change with being able to screen on multiple pages at the same time against your watch list and portfolio. So if you haven't checked that out, go ahead and try that. That is a Barchart Premier feature, but we offer a 30-day trial if you want to test it out and see if it works for you.
Cool, excellent. Okay, so let's let's hang on before we answer this question. I do see a couple questions pop up. Richard asks, do you prefer trading options or futures? And so, Richard, yeah, my background is really a futures trading background, and I do like trading futures, but I really love options. I just think options are great because, you have a limited amount of risk, you know what your risk is. You don't need to, what's cool about options is you don't need to predict which way the market's going to go. Futures, you do. In options, we have 3 different ways the market can go. It can go up, it can go sideways, or it can go down. And there's a lot of option strategies where we can pick 2 of the 3 as long as it doesn't do the one that we didn't pick. So that's what's really cool about options. David asked what platform I'm going to use. I'm not going to answer that one, David, because I don't want to endorse one platform or another. I think it's important for you to, look what's out there. Just, every platform has its plus or minuses and what you want from it. Joe asks, breakout candidates, how do we scan for those? So Joe, we can look at our top stock picks, look for those technical indicators that are starting to move up or cross over on our MACDs. There is a couple other, let's see, under our stock top picks, right? If I go into there, there are all these different indicators that will show you a potential breakout candidate, and you can look at your chart and see where you are in that trend. Under futures, we have something very similar. It's called the Futures Trading Guide. This one is based on a 9 versus 18 system. Again, you can look at your charts, look for where you are in the price action, right? If it's about to break out above a range, and also one of these indicators that is being signaled is a great way to look at those. All right. All right. Let's see. Let me see if I can answer a couple more questions here. Can you please speak to the industries and sectors that are likely to rebound after COVID? Thanks. So I think you got to think outside the box on this one. I think all the markets, all the industries that could be benefit from a post-COVID environment, I think those stocks have either already appreciated or like for instance the travel industry. You're seeing a lot of those travel stocks starting to do well. I think you got to think outside the box. You got to think about what is going to be the new normal, right? How are we going to live our lives? The testing, or how we're, the centers where the vaccinations are going to be. But let's even think outside that. Is what is going to change in your life? And I think one of the advices I give for stock investing is just look around yourself and look what happens in your life, how your patterns of life have changed, or what things that you're doing now that you didn't do 6 months ago or 6 months from now, and rely on those things for trading opportunities. Now, I'll give you a real quick example. Is I was going to work one day and I was going to stop at Dunkin' Donuts and buy some donuts for a friend of mine, and for the folks in the office. And the Dunkin' Donuts line was super busy, right? And I was rushed. And I didn't want to wait in the drive-through, and I didn't want to go inside and get the donuts. So I was like, forget it. And then I drove down the road, and there was a Krispy Kreme, right? And there was nobody in the parking lot. And I was thinking to myself, why is Dunkin' Donuts crazy and Krispy Kreme isn't? Now, remember, Krispy Kreme was a big fad a few years ago. And I was like, okay. And I did a spread. I bought Dunkin' Donuts and I sold Krispy Kremes, and that trade worked out because it was something that I've observed. So I don't know what's going to happen in this post-COVID world, but I do know that I'm going to react, make investments based on what I see, what I live, how my life has changed, what are the things that are influencing me, and what are the things that are changing in my lifestyle. And I'm going to rely on those, and those decision-making process usually suit me well. Okay, let's get back to some of our questions. So one of the questions here, Brian's asking, what is more important when looking at Barchart's opinion, the signal or the strength? Okay. So first of all, let's talk about the difference, right? So the signal strength is, the direction. The signal strength is based on a larger data set. For stocks, it's 200 days. For futures, it's 100 days. So the signal strength to me is really about the big picture, right? What is our market doing over a longer period of time? Is that strength? Is that trend continuing to go up? Is it holding its momentum? And then the signal direction is more of a short-term analysis. What is going on in the short term, 3 days, right? So if I see the strength is strong and the direction is strong, that's telling me my market is really accelerating. But a lot of times what I'll do is I'll look for a strong strength, and I'll actually look for a reversal or a weak directions. And this is kind of that impulse correction that we talked about in trend analysis. So what I've done is I pulled up Apple, and here's our bar chart opinion. And you can see that the current strength here, right, the longer term picture is telling us we're kind of right in the middle, right? What is that saying to us? Well, we're saying that Apple's not going up, but it's not going down. So it's kind of in the middle, which means it's kind of going sideways, right? So what I might do is, if I believe Apple is going to go up, I'm going to wait for the current direction to get strong. Or if I think that Apple is going to go down, I'm going to wait for that current direction go down. I want to see that current direction increase. Right now, the current direction is right in the middle. So this is telling me that when I go to look at Apple, I'm going to probably see that Apple is doing basically nothing. It's kind of in a sideways action. And sure enough, that's exactly what we see. We see that Apple looks like it's trying to make a downtrend, but it's still holding that uptrend. So what I'm going to do is I'm going to wait for the direction to get strong, but what direction? I don't know. Is it going to be a direction up, or is it going to be a direction down? Right now, I'm neutral to this. Now, if I looked at my bar chart opinion on a different market, for instance, let's go to Tesla. Oh, what do we see in Tesla? Well, we see what? Strength is super strong. Direction, super strong. So what do we know? We know that this market, when we go to look at the chart, is probably in, rocket ship mode, or what we call parabolic, right? It's really kind of taking off. Do I want to jump on this train, or do I want to wait for my direction to change to look for that correction from this impulse? Okay, so there's two examples of how you can use this one. I do use this one, and I really kind of look for that contra movement after a big impulse. So for instance, in this one, I would be waiting for that direction to change strong to the downside so that I can get an opportunity to get back into Tesla. Okay, all right. How can I follow the smart money to tell me which options they're buying and which ones they're selling, or what stocks they are investing in? And I put these two questions together. Bo asks, how do I know based on volume which options are the best to purchase? So I'm going to show you two tools that we have. One is called the Unusual Options Activity page. So you find that under the options. And I was looking at this morning. This is really, you guys are going to like this. All right. So first of all, what is this telling us? Well, this is going to show us a large amount of volume that is being created today based on a certain strike price in an option that has probably not been active up until this moment. And so what we can do is we can look at this unusual option volume to give us an insight that maybe institutional traders are investing into this stock. Now, insider trading is illegal based on the SEC, and certainly I'm not advocating it. I'm not saying it doesn't exist. I'm not saying it does exist. I'm just saying that options activity is a way to look at insiders. They kind of tipping their hands. They trade options. So, which is kind of weird. I was looking. Okay, so here's the one I was looking at this morning. Okay, Exxon, right? And this is crazy. Look at this. This is an option that expires in January of 23, right? That's 2 years, right? Look, it's 786 days to expiration. Somebody bought 5,000 options at around $21, $22, right? That represents 500,000 shares on Exxon stock that's now trading $40. So this person is betting that Exxon is going to go up in value. They're already paying $20 an option. That's $11 million investment somebody has made in that stock. I think that's a good clue that somebody believes that Exxon is going to go up. So we'll look at Exxon in a second. But let's look at a couple other ones that I saw this morning. Let's see. Okay, let's go down here. All right, here's Trip. Okay, and so looking at call option activity is really important. I think that you can find traders that are investing in that, but look at put option too sometimes. And so what we can see is, if we see an unusual activity in put options, a lot of times what happens is these institutional traders, when they invest in a stock or they buy the stock, they have to buy insurance. They have to protect themselves. So they'll buy put insurance, right? So a lot of times the unusual put option activity is actually an indication that somebody is buying that stock and buying the puts to protect them. Now, I saw two this morning, and there's two distinctions here. So that's why I want to show it to you. Trip Advisor, and then down here, this is Nordstrom's. So let me go back to the flip chart so I can just kind of show you. Now, remember the strikes here on both of these are $26. So I'm going to go to flip charts. And I'm going to look at the underlying asset, not the strikes. And let's see, where's flip? Let's see. Well, first of all, let's look at, well, here's Trip. There it is. Okay. All right, so somebody was buying $26 puts. Now, that could be a sign that they are protecting themselves to the downside because they've already made an investment in it. And I think that's kind of what we're seeing here in Trip is, this stock has appreciated a lot in a short period of time, and now prices bumping up against what could be supply or resistance or however you want to define it. So somebody is locking in profits. They're buying puts, right? So that's probably what's going on in here. But let's look at Nordstrom's, right? And this is really what you want to look at. See what's going on in Nordstrom's. Its price has been going up. So somebody has been investing in Nordstrom's. So this would be a sign that you would be, that unusual put option activity is indicating to you that somebody is making a major investment in Nordstrom's. Now, where could Nordstrom's go? Well, it looks like it could go all the way up to $35 or $40. Now, one of the things that we've talked before in the past, price volume and volume indication, you can see that during this rally, a strengthening trend is usually supported by increase in volume. You can see that there's a lot of volume that has been in this trade. So that would be a way for you to find opportunities through options to find markets that traders are trading in. The other thing that we've done before in our webinars, we talked about top stock picks. Again, I would look at top stock picks, go to my flip charts, and now that Gene showed us how we can screen based on price volume, which is really cool, look for those stocks that are either breaking out or are breaking out on volume, right? So breaking out on volume. So that would be an indication that somebody is investing in those different stocks. Okay, so let's see where we are. How are we doing on time, Gene? We're doing pretty good, I guess, huh?
We've got about roughly 15 minutes. There are a number of questions that came in on that unusual options page. I don't know if you want to just take a moment and see if there's any other additional points that you want to make here.
Let me see. I got to scroll back here in a second. Let's see. I see a lot of questions popping up. So yeah, I appreciate everything. Okay, it seems counterintuitive that the current price is $40 for Exxon. Yeah, it doesn't make sense. Right? Why would somebody buy a $20 call when the market's already trading? Right, that's really unusual, right? I mean, something's going on there. So yeah, I agree with you. That would be counterintuitive, right? Why would they buy a $20 call on a $40 stock, right? That might be a little outside my expertise, but yeah. So Tim asks, on following smart money, though, how can you tell the unusual auction isn't simply a hedge? That's true, Tim. That's difficult. We can't really tell that difference. But it's kind of playing Sherlock Holmes here, right? If I see price movement, I see a rise in volume, then I see option action, right? That is telling me that though they're going to invest, they've made that investment in it. And you're right, it could be a hedge. But I'm going to tell you a lot of times that these large institutional traders, they just don't make one bet. If the market starts moving their way, what do you think they do? They double up, they buy more. So a strengthening trend, right? Or that might attract other traders who say, hey, look at something's going on, right? Remember, Gordon Gekko and the Wall Street movie, right? Blue Horseshoe likes Endicott Steel, right? They talk to each other. Right? They get out there and they promote these stocks. So, one institution might influence another, Tim. So you're right. It's hard to discern that, but you got to just use the tools that we have available. So are those the two questions you were talking about, Gene?
Yeah, that's it. Yeah, thanks, John.
Okay, cool. All right, so let me come back to my. All right. I'd like to know more about strategies and bar charts for momentum and swing trading. Also, are there books that you would recommend based on these strategies? So let me just go over a couple of them. For under stocks, under the stock headings, you can go to the market momentum page. Inside of there, you can look at the broader picture of the market and kind of discern what's going on in the big picture. But you can also use that as an opportunity to start looking at individual stocks, either on multiple time frames or different exchanges, and also the indicators that we have in our tools. And then in the individual stocks, we could look at particular trading strategies, those moving averages and MACDs. And again, one of the things that Gene just showed us is we can go to the top stock page and then we can screen on weighted alphas and these technical indicators. So let me go to the stock page and there's market momentum. And I think the momentum today is actually down, right? A little bit more stocks today. We're looking very short term, but you can look based on month. You can look based on exchanges. And down here, here's some of those indicators that we use: 5 days, 20 days, 50 days. And you can see that for today, right, 82% of all stocks are above the 50-day moving average. That's really telling us the market has a lot of forward momentum, right? In the short term, we're seeing prices retreat a little bit, and that's normal, right? That's kind of normal. For sectors, I would look in the industry rankings and performances to look for those momentums. We do have a video on that one. I don't know the date, but it's sector rotations or how to find candidates using sectors, I think is the name of the video. And then under futures, our trading guide, we have, futures are a little bit more short term. We do have that 9-18-day MACD strategy, which is about change in momentum and these crossovers of different trends. Okay, so let's look at that one real quick. So that's under futures. And there's a futures trading guide. And it tells you how the system is. And again, we do have a video webinar on that one. But let me go up here to my watch list, but now I'm going to go to portfolios. And this is, when you watch the video on this tool, this is a portfolio that I've been building since we did that video, where I'm just taking certain trades based on this indicator. And you can see this portfolio, which started with just $15,000 of total margin, is done pretty well in the last, let's say 5 months. But here's the guide itself, where I just put the trades in as they pop up. And let's see how this one has been doing. This one took a little bit on the chin just recently. So let me go here and show you that. You know, a lot of the Dow, NASDAQ, and S&Ps that we got in before the election, then we got out after election, they kind of, we call these hickeys. So the portfolio suffered a little bit, but it's done pretty well. And we've been doing this one since about late August, early September. So, you know, there's another great tool about trying to catch these larger term trends in our futures markets. Okay. All right. Okay. Oh, the book, Aaron, there's a lot of books out there, right? So I'm old school. I like books that, tell you a story, and, they're a little bit of, maybe a little dated. But one of the ones that I like is Random Walk Down Wall Street. In this book, it's about indexing, trading, momentum, bigger picture type trading. And this is kind of one of those mainstay books that all traders have in their library. A lot of life lessons in there and stuff. So that would be a book I would recommend for you. It's not particularly a certain strategy, but more of a philosophy of trading. Okay. All right. Please explain the significance of pivot points and their usefulness on Barchart. And this is from Jason. So the takeaway here is that a pivot, or floor trader's pivot, is based on a weighted average on yesterday's high, low, and close divided by 3. That gives you a base number, sometimes referred to as a neutral number. And then we pick a pivot above or below. It's done by a math formula. Don't worry about the math formula. But it helps us discover support and resistance areas. And really what it does is it kind of creates this self-fulfilling prophecy where price will tend to go to the pivot, and then once it reaches that first pivot, a lot of times the price will back off. And then the other thing we can use it for is to find momentum. And if price gets above the pivot, the first pivot, or below the second pivot, that's telling you your market has internal momentum for that day, and that the second pivots, or the tertiary pivots, can be used to help set greater targets if you happen to catch that price movement. I use pivots in the futures markets, but I use them with my ATRs as well. So let's go back to our stock. Let's see. Let's just put in a stock here. Here's Alcoa. Right. And so where do we find these pivots? So am I looking in the right place? There it is. Trader's cheat sheet. There it is. Okay. I know sometimes I talk to myself. I know it's crazy. And so you can see that the last price here is 2066, and we're above the pivot, right? So that's telling you the market has positive momentum. Here's our first pivot resistance, right? So that would be, if you caught this trade, you would use that as a target. If it got above there, then you could see a greater price movement to the second pivot. So, it's kind of a self-fulfilling prophecy. It kind of shows you internal momentum for one day. They were very popular on the floor. I wouldn't rely on them for, all going, or, yes or no. It's just another tool that you can use in your trading. Okay. All right. Okay. All right. Where do I start when using Barchart.com and a list of features to work through in a logical 1, 2, 3 manner? So this is from Robert. And I think on this one, I'm going to refer to our expert here about all things bar charts. So you want to take this one, Gene? Do you want me to put these all up?
All right. For some reason now I'm having the technical difficulties. Are you seeing my? No, we're not seeing
Yeah,
my
we are seeing
screen.
your. I see your screen.
You're seeing Apple? No, that's your screen.
Oh no, I see. Oh, you.
Oh,
I need to
sorry
learn
about
this
that,
anyways.
folks. So there are a number of places that you can find things to get you started. And John is logged into his Barchart Premier account. So if you go to the Tools menu and click on Barchart Premier, if you happen to be a Premier member. No, okay, either there or else right there in the Tools. So being a Premier member, as far as, 1, 2, 3, how to get started, we list on this page and a lot of different resources for you. It shows you the different research tools that you get with your Premier membership. There are tutorials there. There's a way for you to learn more about the different features. So this is one really great place for you to get started. Now, if you are not a Premier member, under the Tools menu, John, if you can go ahead and click on Tools. John showed you the free webinars page, but there's also that site education page under Resources. Yes, right there. And this page is designed to give you quick tutorials. The webinars, as you see today, a lot of them last a good hour or so, but you have a number of very short tutorials here, along with some additional content that you can research. And there's a couple sections here, the new site members, pages of interest, the one using Barchart tools to find interesting stocks. This is something written by Jim Van Meerten, who is the Chart of the Day author for us. And this kind of gives you some ideas as far as how he goes about looking at the markets. Under general topics, things like how to navigate the site, how to view page help, how to do a data table expand. These are all, 1, 2, 3 step-by-step things that can help you get started. And finally, when you do become a member, whether a free member or a Premier member, we do send you a series of educational emails. And if you John, if you go to the Tools menu and then the Newsletter menu, pre-newsletters.
Pre-newsletter, yep.
Yes. You may also choose to opt in to see these Barchart educational emails, the one in the right-hand column up at the top. There's a series of 8 educational emails that we can send you with getting started tips. So that's my answer.
Cool. Excellent. I love that. Yeah, I think, don't get overwhelmed, guys, folks. There's a lot of tools. There's a lot of benefits from being a Premier member. And, you just got to get in there and start digging around. But know that, we're not going to let you drown in the deep end. You got a lot of support. There's a lot of tutorials. There's a lot of videos to help you walk through. And what Gene just showed you, there's really a kind of a process here that you can work through to get the most benefits out of your membership. Okay, so check the educational site for short tutorials. Use the new site members page for things of interest. Premium members, check out your premium subscription page. Barchart educational emails, what Gene just showed you. And then remember that this is where you can sign up in the right-hand corner for those of you who don't have premium membership, and it is on a trial basis for 30 days. Now, I'm kind of stalling here for a second because I'm reading the questions so we go along. And so Dan asks, is there something to identify stocks that are in downtrends? Well, I think you can look at a lot of things, Dan, but I would just look at price action, right? Again, I would use that multiple time frame analysis of larger time frames are going to give you larger probabilities, smaller time frames smaller probabilities, and just trust what you see. And what is a downtrend? Well, a downtrend is a series of impulses and corrections where you make lower highs and lower lows. And then Hans asks, what percentage stop levels do you use? So Hans, I think every trader is going to be different. Depend on your risk tolerance, your experience. For stocks, as a general rule, and again, what I do might not work for you. I'll use like a 5 to 10% on stocks on an initial investment. And in futures, I use like 2% of my equity rule. So if I have, let's say, a $25,000 futures account, then I will only take futures trades where I risk $500, 2% of my total equity. So it varies based on the style of trading or the asset that I'm looking at. Options, a lot of times I put in a trade in options where, I'm going to risk, the option because my risk is limited because I'm trading options. So it does vary. I don't want to influence you one way or another. But I think if you're wealth trading, the key, I think, the takeaway on risk management is we want to take less risk. We don't want to take a lot of risks, right? We want to take a lot of little trades and hope that one of these little trades turns into a big trader. And if you look at, how hedge fund managers trade or ETFs, they make a lot of little bets. And then they hope that they get one that really takes off, and then they really hammer it, right? So, they use a lot of these hedge funds, they use a 1% rule, right? They don't take any loss, right? As soon as they get, they get a little hickey, boom, they're out. And they'll wait for that market to change its direction to get back in. So, I would say try to discover a trade plan where you use smaller amounts of risk so that you can take a lot more trades, because that's really what trading is about. It's not about always getting winners, right? And in a lifetime of trading, you're going to find that you're going to be about 50-50. And that what we want to do is that the winners we get, we want to make sure that we really get as much out of those winners. But the losers, we want to make sure that are small and limited, and we want to eliminate those big losers. So I hope that one helps. With you, Hans. Okay, I see we're right at 1 o'clock, right there at an hour. Okay.
Well, hold on, John. I have one more question for you.
Okay.
Pumpkin or pecan pie?
Chocolate pecan pie with homemade. Wait for it. Bourbon whipped cream.
Ooh,
doesn't that sound good?
Yeah, it sure does.
yeah. That's one of our mainstays in our. But I tell you, by the time I get around to that and I have that piece of chocolate pecan pie, I go right into the food coma. Well, listen, folks, I hope you enjoyed today's session. I want to wish you everybody thanks for coming, and want to wish everybody a health and safe Thanksgiving. If you're traveling, be safe. And I want to wish you the best of all trading, and you too, Jean. Okay.
Well, thanks. Same to you, John. One thing I'm going to also ask you to squeeze in here at the very end. John's got another webinar coming up next week. Let's just take a moment and tell people where to sign up for it and what you will learn if you join us next week.
So we're going to look at futures markets, but the technique is not exclusive to futures markets. We're going to look at longer term trends and how we can use Bollinger Bands to help us discover as trends are developing. But also what's really cool about Bollinger Bands is it's a great tool to help us discover when trends are about to change, or when I want to start aggressively moving my stops to protect those greater profits that I've gained from one of these longer term trends. So it's going to a little bit more trading strategy and a very specific tool or a technique that we're going to combine the two of them together. So I hope you guys come and check that one out. I think you'll really enjoy that one.
Okay, great. Thanks again to everybody, and hope to see you next week. Bye-bye now.